A shrinking dollar. Is this really a problem? Is the Bernanke dollar? Is it the Paulson dollar? Is it the Pelosi dollar? Who's that guy on that dollar bill? What about Paul Krugman's recession forecast in today's New York Times? Let's bring in our guest, Don Luskin, Chief Investment Officer at Trend Macro, and Jim Glassman, Chief Economist with J.P. Morgan. Before we get to Paul Krugman, I think Mr. Luskin's going to have something to say about that, as well as some other things.
I
Jim,
just might.
Do you believe that this dollar story is going to cause inflation to go way up?
Yeah, I think it's a big deal because the most sacred duty of any government is to protect the value of the money that hardworking citizens spend their life accumulating. And when you have a Treasury Secretary and a Federal Reserve Chief and a posse of cabinet officers traveling to China where the big message is to get China to revalue its currency so that the U.S. dollar buys less, so that American consumers have to pay more for imported goods, that is an immoral scandal. That is the government telling every consumer, we expect you, we want you to pay more for everything you buy at Walmart, and that's a crime.
But actually, okay, I have my serious doubts about this Chinese yuan devaluation story. I agree with you on that. But Secretary of the Treasury Paulson said he's in favor of a strong dollar. A strong dollar is in the nation's interest. And, Don, I know you and I disagree a bit on this, but in fact, the total inflation rates, the CPI has come all the way back down to 1.3%, and the consumer price deflator has dropped back to what? The total there is 1.5%. So you got both major indexes at 1.5% inflation. Import prices have also been falling. I'm still trying to figure out why this dollar story is so prominent.
The reason the dollar story is prominent is if you have enough of a dollar decline for long enough, that means one thing and one thing only, which is the central bank is creating too many dollars. You create too much of something, you create an overabundance of something, its price relative to everything else will eventually go down. Remember what happened after the big dollar devaluation of the mid-'80s. We had the biggest bear market rally in inflation that we've had since the inflation top in 1981. Core CPI went from 3.5% to 6% in the late 80s and early 90s. Alan Greenspan had to raise the Fed funds rate eventually to 9.75% to stop it. We had the recession of 1990, 1991 in consequence. This is what happens. Currency devaluations make no more sense for the United States than they make sense for the third world countries on whom the IMF forces devaluation.
Now, Jim, in view of the bond market, which, I don't know, 10-year bonds are probably down to, what, 440 today or close to it?
Yeah, or lower, yeah.
Or lower. I want to ask you, I would speculate that if it's a terms of trade issue, the best way to improve American economic growth right now, besides keeping low tax rates in place, that's crucial, supply side, would be for the Federal Reserve to actually lower their Fed funds target rate by 50 basis points, and that the dollar would rally at a lower Fed funds rate.
I simply don't think that's true, because the fundamental place where you and I disagree, Brother Larry, is on the inflation outlook. I agree with Ben Bernanke that surprises in inflation are likely to be on the upside, and if the Fed lowers rates precipitously, it will make that upside surprise in inflation happen, and that is going to be a disaster for the dollar. Right now, the dollar is declining because it fears exactly that. The bond market is forecasting that the Fed will cut rates. The dollar is looking at that and saying, oh my God, that'll be inflation stimulating. Crash.
There's the headline. Paul Krugman, economic storm signals. Mr. Luskin, what's your take?
All I can say is in that column, Paul Krugman quotes his mentor, Paul Samuelson, as saying that the stock market has predicted 9 of the last 5 recessions. So we can't trust the fact that the stock market is flirting with new all-time highs as to indicate that the economy is actually okay. No, we have to ignore that. Great. The stock market's forecasted 9 of the last 5 recessions. Paul Krugman has forecasted 9 of the last 0 recessions. The guy has the worst track record in the world. So why would anybody ever listen to him? Ever?